Hey everyone, we need to talk about what just happened in silver, because this isn't a normal red day. Silver is sitting around 81.64 right now, and it's down about 1.9% in the last 24 hours. That sounds tame until you realize what it represents. It's another flush lower while the market is still telling a totally different story about gold. Gold is still around 50.4870, basically flat on the day. So silver's getting smacked, gold's barely blinking, and that spread between the two is the message. If you own physical silver, or you've got a silver ETF position, or you're in miners, you're feeling it. A 2% hit doesn't sound like a lot until you put real numbers on it. If you're holding, say, 1,000 ounces, that's not an abstract chart move. That's real money. And the bigger point is what usually comes next after a flush like this. Because when silver gets flushed like this, it's rarely the end of the story. Something bigger is happening beneath the surface. Here are the three factors that converge today. First, the market is drawing a thick psychological line around gold at the $5,000 handle. And I want you to hear that clearly. The number 5,000 matters because humans trade numbers, not just fundamentals. Round numbers become battlegrounds. They become I'm safe above here and I'm trapped below here. And when a market holds a level like that, it changes positioning. It changes risk limits. It changes the way big money expresses a view. Right now, gold is acting like the anchor. It's telling the world, risk is still here, fear is still here, capital is still flowing into hard assets. But silver isn't trading like an anchor. Silver is trading like the leveraged cousin. The one that gets pushed around when liquidity tightens, when margin rules change, when traders have to sell what they can sell, not what they want to sell. Second, the narrative driving today's volatility is not a clean inflation up, rates down story. The dominant chatter hitting the market is that a lot of this metal's volatility is being pinned on speculative behavior overseas, specifically on the China speculation angle that's getting repeated everywhere. Whether you agree with that framing or not, it matters because markets trade stories in real time. When a story like that takes over, it does two things at once. One, it gives traders a simple excuse to de-risk fast, and two, it makes the move feel unstable, like it can reverse violently at any moment. That's exactly the kind of environment where silver gets hit harder than gold, because silver is the one people treat like a trade first and money second. Third, flows and positioning behavior are not moving in sync between gold and silver right now. The way people are talking about ETF behavior is basically this. Gold flows look steadier, and silver flows look erratic. That word, erratic, is the giveaway. Erratic means you don't have a stable base of holders. It means you have hot money sloshing in and out. It means you have people chasing moves and then panicking out. And when the market sniffs that out, it pushes harder because it knows it can. Put those three together, gold defending a major psychological level, a volatility narrative that encourages fast de-risking, and silver positioning that looks twitchy. That is not typical volatility. That's a setup for the next phase, either a clean rebound that humiliates late sellers, or another leg down that shocks people who thought the flush was the bottom. Now, what Wall Street analysts aren't discussing is how silver flushes usually work in real life. Because if you've watched silver for any length of time, you know it doesn't politely trend. It whipsaws, it runs stops, it punishes certainty. So I analyzed the price action, and here's what jumped out at me in plain English. Silver's down nearly 2% and sitting around 81.64. That means the market is actively rejecting higher prices that were being talked about just days ago. In the chatter, you keep hearing that 84 zone come up as the recent line everyone was celebrating. Silver above 84, silver breaking out, silver entering a new era. And now we're not there. We're below 82. That's important because the market just created a fresh group of people who bought into the excitement, and now they're underwater. And underwater traders don't think like investors. They think like survivors. They either sell into weakness to stop the bleeding, or they hold and pray. Neither is a strong foundation for price stability. So here's the clean way to think about it. When silver drops like this while gold is holding, the market is telling you it's not rejecting metals as a whole, it's repricing leverage. Silver is the metal that gets treated like a lever on the macro narrative. If the narrative is stable, silver can outperform. If the narrative turns chaotic, silver becomes the first thing people reduce because it's more volatile, it's more crowded, and it's easier to shake people out. Now let's talk fundamentals, the real supply and demand picture, because this is where people get completely confused. Silver is not just poor man's gold. Silver is money, yes, but silver is also a critical industrial input, and that creates a weird identity crisis. In a risk-off moment, investors want the monetary hedge, gold. But in a growth scare moment, the market starts questioning industrial demand, and silver gets punished, even if the long-term demand story is intact. And that's why silver can look weak even when the world looks like it's heading into the kind of environment that should be bullish for hard assets. This is the part most people miss. Silver's fundamentals can be bullish and the price can still flush. Because price is not only fundamentals. Price is positioning, leverage, and forced selling. And that brings us back to the institutional behavior. Smart money moved before the crowd noticed. When you see gold holding a major level, and you simultaneously see headlines about record interest in gold-related vehicles in big markets, that's not random. That's telling you there is persistent demand for the safety trade. But silver is not being treated as safety today. It's being treated like a risk-on expression that got too crowded and is now being cleaned out. So if you're a silver holder, you need to stop asking the wrong question. The wrong question is, why is silver down today? The right question is, what does a silver flush usually set up next? We've seen this exact pattern before. Back in 2020, silver gave people a masterclass in emotional whiplash. First, it collapsed so fast that it convinced people the metal was broken, not down, broken. People stopped talking about upside targets and started asking whether the whole bull thesis was a fantasy. Then, when the dust settled, silver didn't just recover, it launched. And it launched in a way that made anyone who panic sold feel physically sick watching the rebound. Now, I'm not saying today is a carbon copy of 2020. It's not. The world is different. Liquidity is different. The macro backdrop is different. But the psychology is familiar. Silver flushes tend to do three things. They punish late buyers, they scare out weak hands, and they create a cleaner runway for the next real move, whatever direction that move ends up being. That's why these days matter, because the market is testing who actually understands the asset and who just borrowed confidence from a headline. Let's make this personal. If you're holding silver and you're down 2% in a day, the pain isn't just the number. The pain is the uncertainty. The what if it keeps falling. The what if I was wrong. The what if this was the top. And if you've got miners, it's worse, because miners often move like silver on steroids. Now zoom out and think like a household, not like a trader. If hard assets are where people go when they don't trust the system, then a divergence day, gold steady, silver flushing, is the market telling you that trust is fracturing in layers. Gold is the I don't trust the system asset. Silver today is being treated like I don't trust the stability of this trade. That's a positioning message. And it matters because if the market stabilizes, silver can snap back violently. But if the market gets another shock, another volatility spike, another liquidity squeeze, silver can get hit again even if the long-term story hasn't changed. So what do you do with that? You don't need a chart, you need a framework. Here's the framework I use. When silver flushes while gold holds, I watch for two things. 1. Does silver stabilize and reclaim a nearby psychological level quickly? If it does, that tells you the flush was more about forced selling than about genuine bearish conviction. 2. Does gold stay above the major handle? Because if gold loses that psychological floor, then the whole complex can shift from volatile but supported to everyone rushes for the exit. And right now, the market is sitting at that fork in the road. Look, the question isn't whether we see more volatility. The math is clear. When stories about speculation and instability dominate, volatility tends to feed on itself. Traders tighten risk, funds reduce exposure, retail gets emotional, liquidity thins out, moves get exaggerated. The real question is, are you positioned for what comes next? In every previous cycle where uncertainty spiked, tangible wealth tended to hold its ground better than paper confidence. Not every day, not in a straight line, and not without pain, but over the full cycle. Right now, silver is around 81.64. Gold is around 50.48.70. The next few sessions matter because they'll tell us whether this was a classic shakeout or the start of a deeper unwind. This is educational content, not financial advice. Do your own research. Consult licensed financial advisors before making investment decisions. These are market observations and analytical frameworks, not buy or sell recommendations, but the data tells the story. All right, before you go, 3 quick things. 1, drop a comment below. Tell me where you're watching from and give me your prediction. Where do you think silver is headed by the end of this month? Not where you hope it goes, where you think it goes. 2, if you're not subscribed, hit that button now. I'm putting out unfiltered analysis consistently. And listen, I'm fighting copycat channels stealing this content. If this video provided value, comment data over hype so the algorithm knows you're here for the original. 3, next video drops soon, and I'm covering the one data point that usually shows up right before silver snaps back hard. It's flashing again. Last time it showed up, people who were patient got rewarded, and people who panicked regretted it. You won't want to miss it. See you there.